Filing GST returns can feel like wrangling a tornado of paperwork. But underneath the clutter, there's a clear, predictable flow of information. Our goal today is to get your GSTR1 successfully submitted, whether you are manually inputting a handful of invoices online or uploading thousands at once through the offline utility. To do this, we will ignore the vast majority of the portal's noise. Most businesses only need to master 4 specific tables: the B2B table, the B2C table, your HSN summaries, and documents issued. By isolating those 4 sections, we strip away the bureaucratic maze. What remains is a repeatable system that you can execute with confidence every single reporting period. Step 1 is orienting yourself on the return dashboard. Your immediate task is simply to select the correct financial period, deciding whether you are filing on a monthly or quarterly basis. If your business had exactly 0 transactions during this period, you have a direct shortcut available: the nil return. You will see a checkbox at the top of the portal labeled File Nil GSTR1. Check that box, hit Proceed, and your filing process is instantly complete. Identifying a period of absolute 0 activity right away prevents you from clicking through complex data tables that require no input. If you did have taxable sales, your first major stop is the B2B table. This section is reserved exclusively for business-to-business transactions, where your client also holds a registered GST number. For low-volume filers managing 5 to 10 invoices, the manual online method is best. You will enter each record one by one, inputting the client's GSTIN, the invoice number, and the date of the transaction. Carefully distinguish between total invoice value, which includes tax, and taxable value, the gross amount before GST. Don't manually calculate IGST or CGST splits. Entering the GSTIN automatically identifies the place of supply. Just input the taxable amount and rate. The system handles tax calculations. Now, if you are processing 50, 100, or thousands of invoices, entering them individually becomes a bottleneck. For that, you need the GST offline tool. The offline method relies on bulk data uploads. Prepare a spreadsheet strictly following the required format: GSTIN, invoice number, date, value, and place of supply. You feed the spreadsheet into the offline tool, which compiles your data into a single JSON file. You then import that JSON directly into the online portal, populating all your invoices instantly. Choosing the correct approach up front determines your workflow efficiency. Manual entry ensures precision for a few records, while the offline utility delivers the necessary scale for high-volume periods. Moving past registered businesses, we arrive at the B2C section. This is exclusively for your sales to end consumers who do not possess their own GST numbers. The reporting logic completely changes here. Instead of lobbying every individual receipt, you aggregate your sales based on geographic location. If your business is in Rajasthan, but you sell to consumers in Bihar, you simply select Bihar as the state, input the combined taxable value of all sales to Bihar for that period, and apply the tax rate. A highly useful system update is that the portal now successfully accepts negative values within this B2C table. If a customer returned a product from a previous month, you can input that refund as a negative figure, allowing you to accurately balance your current month sales without triggering errors. By grouping consumer transactions at the state level rather than the invoice level, the administrative burden shrinks significantly, keeping the reporting manageable regardless of your retail volume. With your sales logged, we move to Table 12, the HSN summary. This section requires you to consolidate the data you just entered across both your B2B and B2C tables. You will list out the specific HSN classification codes for the products you sold, alongside their total combined taxable values and the resulting tax amounts. Next is Table 13, Documents Issued. Think of this as the internal ledger that verifies the sequential integrity of your paperwork. Here, you enter the exact numerical sequence of the invoices you generated during the filing period. If you produced invoices 112 through 124, you log that range, making sure to explicitly record if any of those specific invoices were canceled. Together, the HSN summary and the documents ledger act as a mandatory internal audit. They ensure that every product classification and every piece of paper aligns perfectly with the financial totals you reported earlier. With the tables complete, scroll to the bottom and click Generate Summary. Then refresh your dashboard to review the aggregated data. This is your final verification checkpoint. The total tax amount calculated from your combined B2B and B2C tables must perfectly match the total tax amount reported in your HSN summary. Take this mathematical check seriously. Once you proceed, the data you submit here will flow directly into your upcoming GSTR 3B. It becomes locked in place, and you will not be able to simply delete or change those specific entries for this period. If you do discover a historical error after submission, the system provides a safety net, allowing you to file formal amendments in subsequent reporting periods. If your numbers balance, click File Statement, confirm the authorization prompt, and enter the OTP to finalize the submission. Building a habit of rigorous mathematical cross-verification before you make that final click is your absolute best defense. It ensures you maintain a clean, accurate compliance record without hard-coding errors into the GST framework.